Hi everyone, I'm a regular 38-year-old Singaporean 9 to 6 tech worker living in a HDB simple lifestyle with no car. Here I document my journey towards a $4.5 million retirement goal by age 50. The portfolio sits at $580,000 so far, with more than half the portfolio comprised of profits, and has outperformed the S&P 500 by 75% at an annualized performance of 22.42% on a TWR basis, double the S&P 500s after 4 to 5 years of investing in spite of the 2022 market crash. So I have about 12 more years to go in my investing journey. For transparency's sake, these are the screenshots of my 3 brokers. So you know I'm not pulling numbers out of my backside lah to put on the portfolio tracker. In today's episode, I'm going to talk about the MAS warning issued to 5 content creators about giving financial advice. Don't worry, guys. ContraTurtle was not one of them. Anyway, I'm too small, right? Nobody gives a shit. Nor do I wish to speculate on who these 5 people are. But I thought of taking the chance to discuss why there are a few conflicts of interest as a content creator doing finance topics. And why, since the beginning of my channel, I've actually rejected all affiliate deals related to trading brokers, short term trading products, or platforms that promise high yields like chocolate finance or random crypto shitcoins like Luna Terra, even though some of them have offered me thousands of dollars. The only 2 affiliates I have ever had on my channel, as you guys should know by now, are Portsedo, the portfolio tracker that I use, and Fiscal.ai. It's just 2 very simple tools that I use long term in my own investment research and tracking. So whatever I put as a link on my YouTube, I actually use it myself and I will use it long term. So I've also just temporarily closed, well, not temporarily, I think pretty much long term lah. I've closed my paid Patreon subscription service just this week for conflicts of interest reasons, which I will explain in this episode. And then I will share why I don't think that actively promoting broker affiliates is in the viewer's best interest. Yeah, I said it, guys. You have to understand that by doing so, right, in this episode, right, I am pretty much committing what we will call financial seppuku or harakiri, or in English, financial suicide as a content creator. Because there's a good chance, after this episode, right, no financial platform will work with me. But I think it's okay, right? Because I believe that this is truly what I want and I think is best long term for my audience. We're all just regular Singaporean folks. You guys are the same as me, right? We work hard at our day jobs and our savings are hard earned. So I refuse to sell out Singaporeans for short term cash and for things that either don't fit my long term principles or they don't reliably add value to viewers more than the price they pay. And so I decided to take this path of hard money instead of easy money. And to explain this first conflict of interest as a finfluencer, I want to bring up a Warren Buffett quote that best describes my own investing philosophy, which is, you don't get paid for activity, you only get paid for being right. Between 2021 to 2025, I performed only 63 transactions, which equates to about maybe 1 transaction per month over the last 5 years. In fact, this is just an average, because sometimes, right, I had no transactions at all for up to 6 months. I think this year is a great example. I had no transactions for about 5 to 6 months, just doing nothing. But why is it that despite the lack of activity, right, my win rate against the S&P in terms of trade transactions is 76%. And even more interestingly, right, when we look at one of my brokers summary tab, I think you guys can recognize which broker this is. My lack of activity, right, beats 98% of other users on the broker on an annualized time-weighted return basis, or TWR for short, simply by staying put with the positions I have and doing nothing, barely buying or selling, right? Not much activity. So isn't this contrary to what convention makes us believe? That you have to try and time every zig and zag of stocks, right? Up and down, trading in and out with lots of buy sells, so that we can attempt to beat the market or, like 10x our gains when you go up and down, just try to go in and out and min-max every single transaction. I actually think this is the worst lie of the 20th century. That the more buy and sells orders you make, the higher your win rate and percent gains. Unless you tell me you are Jim Simmons from Renaissance Technologies, you have an army of PhD mathematicians, you are a PhD mathematician yourself, and therefore you do quant trading. Otherwise, I believe, right, that the best way still to make money for us regular folks is to either do indexing long term over at least 15 years consistently to earn the market average of 6 to 8%, or find high quality companies and just let compounding do its work uninterrupted in a slow fashion over many, many years without much buy or sell activity. And that's why, right, to the trading brokers, I am the worst type of customer against what they represent. Because remember, guys, brokers make money on trade commissions. They don't make money on their cards or backside. The more people they can get to actively sign up through affiliate links, especially in Fomo bull markets like today, the more trading activity they can promote and the more commissions they can earn. This is the same for all those platforms that promote high yields, and then they do a lot of those affiliate collaborations with content creators, because a lot of them are trying to earn the spread on their yields, which is what we've seen with Luna Terra and Chocolate Finance. Remember, guys, there's no free lunch in the world. There's always a catch. And over the last few months, right, I received a lot of emails from a lot of the popular brokers, finance platforms you can think of here in Singapore. And ContraTurtle rejected all of them. I mean all of them. I rejected every single one of them. And so I want to declare to all the short-term trading brokers or platforms that offer so-called explosive yields that are higher than normal, that are too good to be true, or any of these crypto shitcoins that only pop out of their cave during the bull season, like Mariah, Carey, or Michael Bublé in Christmas. From now onwards, do not come to look for me. ContraTurtle's door is closed to all of you, and I'm not your ideal representative for affiliate sponsorships. You have to look elsewhere. I don't care if you're offering me 10, 20, or 30k Sing. Yes, I say it out loud. I will not accept any form of affiliate sponsorship that encourages short-termism, because this goes against my long-term investment philosophy, and I will not sell out my Singaporean viewers for quick money. And don't get me wrong, by the way, people still need to open a broker account to invest for the long term in the first place. But I think that short-term trading brokers shouldn't be something that is actively promoted through affiliates, especially in bull FOMO markets like today, because the majority of the audience are likely to open an account, after they watch a video that encourages this sort of thing, and then they will just go trigger happy with a short-term trading mindset, given the recency bias in the markets. And then there's a very high chance they will lose more money than they gain due to over trading, right? Because of all the commissions and trying to time the market in and out. And unless the platform is something I believe truly espouses long-termism instead of over trading for commissions as a business model, I will never be open to any form of such affiliates. So all of you short-term trading brokers out there, whatever crypto shit coins, whatever financial high yield platforms that promises the sky, you guys hear me loud and clear. I say it with this episode, and I will not delete this episode. I will not do a U-turn. You guys can, those of you that look at this episode, I promise you that you guys can video this episode and keep it somewhere for safekeeping, and then you can hold it against me. I will not sell out Singaporeans for short-term cash. I will never do it. The second conflict of interest common with influencers that you need to watch out for are those that do buy or sell signal subscriptions. Now, there is a huge bias to keep pushing out signals to buy or sell a stock in order to keep the subscriber base excited with activity so that they can remain subscribed by giving lots of reasons to perform lots of trading activities. Even though sometimes these subscribers, right, they might be misled into a minefield filled with landmines or of like shitty companies or value traps in a FOMO bull market. Or they might just end up over trading once again. And this takes advantage of dopamine triggers in our brain, where every time we click buy or sell, we get hooked and we want even more buy or sell signals from the subscriptions to press more buttons. So we keep paying these high monthly subscription fees, thinking that the cost is justified because we are guaranteed, so-called guaranteed to make money. Now, this is a very easy game to play for content creators, especially in the current hype market where people want that quick 10x gains. They're impatient to wait for slow compounding over years with little adjustments to the portfolio. Most people, right, they just want to be told right this very moment, can I buy X stock at today's price? How long I need to wait for? In fact, just this week, I closed my paid TurtleNot community after 4 months of running it because I found myself in a similar conflict of interest. The truth is I increasingly received a lot of pings. I got a lot of DMs or even just general pings from the community members, just the sentiment I feel. A lot of the questions asked were like whether or not, the strict buy price levels I've set for myself, which I exposed to all my subscribers, whether these strict buy price levels could be loosened because I made no buy purchases, no activity from me. Even though I have all these subscribers, right, I had no activity over the last 5 months, ever since the Trump Liberation Day dip, right, which was about 20% dip, which is perfect because it was the only time I bought, and that was 5 months ago, right? And barring that, the only transaction was just one transaction. I think it was like 2 weeks ago. It was into Exxon, right? That was it. There's no other thing I did. for 5 months. So I receive a lot of questions on whether I would be also expanding the number of stocks on my watch list outside my circle of competence at a rate I feel is faster than I can truly understand a new company that I'm still researching. So I sense a lot of this restlessness, right? Because everybody gian, they FOMO, the market now roaring. Everybody's scared they miss out. Can I buy? Can I buy today? And it's only after operating for 4 months, right? As the market gets more and more like this, I only started realizing recently that, oh my God, there is really this conflict of interest between real patient investing and doing nothing while waiting versus selling like subscription content. I never knew it until I'm in it. I feel the pressure. I cannot explain to you guys, right? And to be fair to subscribers, right, how do I justify having only maybe like 10 companies, which I do? I think only I have 10 that I'm very focused on, that I've studied very thoroughly. But I foresee that I will probably have almost no buy or sell activity in the next few months or even in the next few years. I told my community, guys, you guys are subscribing, but I really don't see any opportunity. Might even be next few years I doing nothing, just my cash position just going up, right? It is very unlike the great opportunities I saw in 2022 and 2023, right? And so my cash position is just going up, right? Only on rare occasions, like what happened in February, March with the Trump Liberation Day, right? Then I come in for a fat pitch. But other than that, I'm just quiet, right? So this equates to having almost no significant new content to update my community on. Nothing about buys or sells, right? Simply because I believe that the best activity to do at this moment is to be waiting patiently and doing nothing. How do you tell your subscribers for many months or even years that the best move is to do nothing? Most will just think, then I subscribe for what, right? And that's very fair. And so I find that it is against my principles if I were to continue charging a subscription service based on too little ongoing significant content, right? It will not be fair to my subscribers because I always believe that whatever I create, if I'm charging something, I create for my buyers or my subscribers, whatever price they pay, right, the value that I create for them, right, has to be far more than the price they pay. It has to be. And it's quite funny because I say this, but I only charge people 12 Sing dollars per month, which is like 2 cai peng. I always say that, right? 2 cai peng at fish, more expensive cai peng, right, per month. But I just cannot take it. It's just against my principles. All right, even 12 Sing dollar also, I feel like I feel guilty because I really foresee, there's not much activity I can give. In the short term, right, the money, right, if I keep running this subscription, right, is very, very tempting. I just full disclosure to you guys. Look at this chart, okay? This is my last 3 to 4 months in full disclosure, right? On average, I made about 2,000 Sing dollars on Patreon with very little churn, right? If you look at this screenshot, and you will see that based on this trajectory, right, I will be able to make far more money, like really far more money. I can feel it. I think I can hit 10K SGD per month easily. And this is on top of my day job. But, I refuse to compromise on my investing standards and to turn to the dark side of easy money with buy-sell signals in content creation and loosening my investing standards. Right? I cannot compromise it. I just cannot. I can sleep well if my portfolio drops 100K, which it did in Liberation Day, 20% drop. But I cannot even sleep well if I charge $12, knowing that there is a risk that I might succumb to the dark side, given this conflict of interest between content creations and creating lots of subscription activity versus being a real investor. I choose the latter. I choose to be a real investor. That's why I decided to close this subscription, right? And rethink about the community's direction. Instantly, I made all my members alumni members, and I gave them access to my activity for the foreseeable future. Right, even though I already told them for free lah, I already told them that it's unlikely I'll be making much transactions in the next few months or even a few years. But on the flip side, right, you have to be careful when assessing gurus that sell subscription watch lists, which is one of the key things I want to talk about this episode. There are a few signs I want to tell all of you to watch out for, and I really hope that people will listen to this really carefully. And I suspect after I say these things, I might get into trouble because there may be content creators or people who sell subscriptions who will bash me. But I'm not afraid. I got a day job. Guys, I do this out of passion. I scared what? I only make content for Singaporeans because I want to say things that I truly feel about and they are aligned with my principles. Okay, so I'm going to say all these things. The first and most telltale sign, right, of gurus that you need to watch out for are those that sell services and they have a large number of stocks on their watch list. Anything more than 15 stocks, in my opinion. You first need to understand why some gurus do this. They sell subscription service that have many, many stocks on their watch list. It has to be above 15 usually, right? 30, 40, 50 stocks, whatever it is. I'll tell you why. All right. Nobody has ever said this. I can tell you no content creator has ever divulged this. And I figured it out after running a subscription service myself for 4 months. The key is this. The top reason. These gurus, right, they are trying to increase the surface area and the probability of having buy signals at any one time. What do I mean by this? If you have example 30 or 40 stocks on your watch list at any one time, okay, even in a bull market, right, there is a very high chance that any one of the 30 or 40 stocks, right, are correcting down due to some random issue. It could be a down earnings quarter. It could be some random bad news, like maybe ASML is banned from selling to China. I mean, ASML is a great company, but I'm just giving you guys examples, okay? Bad things happen to all companies all the time. If you have a large number, the larger your number of stocks you have as a guru selling your services on your watch list, right, the higher the probability, right, that any one of these 30 or 40 stocks, right, are correcting down to a low enough value buy level due to some bad news every day or every week. You will get this probability that any one of these stocks every day or every week, there's a chance that they go down. And so these services, right, they can frequently fire out these buy signals to all their subscribers who have been impatiently waiting to be spoon-fed a trade signal. It is only possible if your watch list is big enough to maximize the probability of this frequency happening a lot. Whereas, right, on the flip side, if you have a watch list that's very focused, very concentrated, right, let's say you studied, you only have less than 10 stocks, right, and let's say somehow you sell a subscription service, right, which is kind of what I did, right, the last 3-4 months, right, I only have like 8 to 10 stocks on my watch list. There's a chance that none of the stocks, right, will reach a low enough level, right, to constitute a value buy. Sometimes for months, sometimes for years with no activity. And so a lot of these gurus, right, what they will do is that they will play into this mean reversion psychology, where the larger the number of stocks on the watch list, the greater the chance of having a buy signal for any one of the 30 to 50 stocks. And the more people will remain subscribed to the service because they are constantly getting bombarded with buy signals with the promise of the stock mean reverting and giving them maybe a 2-3x gains in the short to medium term. The biggest problem I have with this is firstly, right, it is physically impossible for you to monitor 30 to 50 companies to great detail. I must emphasize to great detail. If you have 50 companies, right, that means on average, right, you need to be reading and studying and monitoring about 7 companies per day per week. You will never get true depth in really understanding a company or keeping up with the industry's developments to develop a true long-term edge in investing within your circle of competence. It is impossible. At best, right, you will only have a surface understanding, and unfortunately, right, this is good enough already for the mass market of subscribers who are none the wiser. Because gurus like these, right, they are cleverly disguising themselves as selling exclusive watch lists of high-quality companies, when in fact, they are really spending more time focusing on mean reversion of company stock prices and having just a very surface understanding of the companies. It will look very fanciful. They will throw you numbers going through the financial sheets, the balance sheet, the income statement, the cash flows, etc. They will look at the ROIC, all the numbers. The problem is that everyone has the same access to these numbers. So there's no differentiation. There's no really looking at the needle in the haystack to figure out what is the edge long term. These people have no edge, right? So even for myself, right, working in technology and focusing largely within my circle of competence of just a select group of companies and trying to read every day, I struggle to even keep up with all the updates every week. Guys, I spend 9 to 6 working in technology. I work in a technology job as an engineer. And even then, right, I am struggling to keep up with the industry's developments, right? I think there needs to be more depth in research before considering a company long term for investing as a stock. I can't even imagine how people are researching down to the grain if they have 50 companies to research and monitor. It is impossible that a guru is a master in 5, 6, 7, 8, 9, 10 industries at any one time. Impossible. And some gurus, they will argue that they have a team of researchers to monitor and study their stocks, and so they are justified maintaining such a large watch list. But I tell you, the irony, right, is if you take a look at any of their top positions, right, they are pretty much similar to the popular indices like S&P 500 or Nasdaq. And so these gurus, right, if you really think about it objectively, they are merely closet indexing. They're just closet indexing and who are buying on mean reversion. That's pretty much it for most of their top positions. So there's no real depth of analysis or research that bucks the trend. So yeah, and the next red flag to watch out for, right, what I call cherry-picked portfolio performance. The most common one I see now, time and time again, right, is gurus that show you the size of their broker account. usually in the millions of dollars or hundreds of thousands of dollars. Now, the first thing you need to do, right, is to question or ask how much of their broker account, right, is from capital contributions and how much of it are actually from organic profits the portfolio earned by itself. If, for example, right, they have been investing for many years, but the majority of their portfolio is made out of cash injections, right? That is a major red flag. Ideally, the profit should constitute more than 50% or even the vast majority of their portfolio. Otherwise, the real source of their portfolio size, right, is not their investment performance, but rather the donkeys or subscribers who pay them thousands of dollars in monthly subscription fees. And this is where the huge conflict of interest lies in. Because people who don't investigate the portfolio percent breakdown between profit and capital contribution fall prey to the size of the portfolio because they FOMO. They say big number portfolio size and they think, wow, one day also I can be like that if I follow the system, right? And so I find this to be nonsense because the idea of investing, right, is so that one day your portfolio should compound far more than any capital you inject into every month, right? That's the point of investing, right? You want the portfolio to carry itself profits wise rather than injecting life support into it, making it look big. Because one day you want to retire, I want to retire, I myself. That's why I'm running this channel to show you guys. I have my own goal at 50 years old, right? The portfolio should be carrying me, instead of me carrying the portfolio, by injecting capital into it, right? So you also have to be careful, right? Some gurus they're very crafty. What they'll do is they'll split up their portfolios into different brokers. And so they only show you the cherry pick accounts that have performed well instead of the overall picture of their overall performance, adding everything together. This one is a bit hard to tell. I mean, there's no way, right? Unless the only way I can think of is they show you like all their brokers consistently every week or every month, and they maintain this consistently showing you their performance over 10 years, right? Which is the next flag I want to talk to you guys about, which is if a guru that has a track record of less than 10 years. Now, I am not a guru. ContraTurtle is not a guru. I'm just a regular Singaporean growth investor. Must put it out there. But you want to talk about time track record, I fall into this category, right? Because I've only invested for coming to 5 years. And so to all my viewers, right, you must treat whatever I say with a grain of salt and also do your own research because I do not have a long enough track record. In my opinion, right, anything less than a 10-year track record has a very high chance of just being lucky. I could be lucky. It is the truth. It is the brutal truth. Unfortunately, I cannot accelerate the passage of time to verify if I have an age or not. I simply have to wait for 5 more years. Then I tell you guys, hopefully I'm still around as a YouTuber in 5 more years. Then we really look at my 10-year performance or 15-year performance, right? So always ask for the portfolio performance over at least 10 consecutive years and beyond. The next warning sign is if the guru does not show you his TWR or annualized time weighted returns. They will show you all kinds of mumbo jumbo percent returns like year to date, or absolute percent return since inception, or absolute percent return in the last 2 to 3 years, etc. Most of the time, right, these other performance percent numbers, right, they will appear very big one. You'll get like 100 or 200% absolute return gains, right? But you must drill down to only this one number, which is the TWR annualized performance over at least 10 consecutive years with no cherry-picked time periods in between. And see if they have beaten a benchmark market average like the S&P 500 on an annualized TWR basis. If they haven't, right, you have not only wasted your subscription fees, but you are actually losing to the market on the most objective performance measure, which is the TWR. And again, you might as well just have done index investing and go chill on your other hobbies or just watch Netflix every day. Honestly, you could have performed much better, right? So for example, right, Warren Buffett, right, he did about 20% TWR annualized over 60 consecutive years. That is the longest track record in history in the world, right? There are also other great investors like Chris Hohn. He beat the annualized, he beat S&P, if I'm not wrong, by about 8 to 9% TWR, which is amazing. 8 to 9% TWR above S&P is incredible, okay? So these are the true goats in the industry. Judge them on the long-term TWR, right? And these people, they often get laughed at one, especially during bull markets, like today. When you have all these so-called trading gods, they will tell you they make 200% annualized returns within 1 to 2 years. Whereas, like the portfolios of these real goats like Chris Hohn or whoever, it seems like they are floundering in comparison in the short term, right? Because most people, they only look at the short term. This is a very myopic view. But if you really look at it on a long period of many years or decades, right, I don't see a single one of these short-term traders shouting out their victories anymore. Because most of them usually, right, they disappear by the wayside after many years. Right? Especially when the big bear market comes, maybe they're on leverage, or maybe their ideas finally, didn't truly have a strong economic mode to withstand the temporary macroeconomic pressures, and they just fizzle out, right? So they never make it to the top of the table on a long-term TWR basis. The only exception I know of is the late Jim Simmons, who did quantitative trading with his PhD mathematician army, and he performed 39% TWR over 30 years, which is a respectable length of time, more than enough to verify that he definitely has a long-term edge somewhere there, in spite of him being a trader than an investor. But in terms of length of time and consistency, right, nobody else has beaten Warren Buffett at 20% TWR for 60 years. Another warning sign, right, is when, this one very popular one, gurus try to sell you the income, the promise of passive income. They will usually start off quoting you some very believable low amount, like maybe like 5K passive income per month. If you sign up to my options trading course or system, the number will sound reasonable one, close to the median salary of Singaporeans. So you get lured in, right, by this realistic sounding number, and then you pay a couple of $1,000s because you think, it's worth it lah. If I can earn something that, I learn a system that makes about the same amount of money I make every year, every month, that sounds reasonable. It doesn't sound too bombastic, right? So they will tell you all kinds of things like how to use option strategies like selling cash secured puts or wheel strategies, etc. They will tell you this is a sure win strategy because there is limited downside in either bull or bear market because of the way that you structure the strategy. And so this plays into the psychology of investors, right, who are fearful of losing money. And let me tell you guys something. I have bad news for all these investors with this kind of psychology. In the short to medium term, right, there is one guarantee I can tell you. Your position, right, if you're invested, right, will confirm have unrealized losses. This is almost guaranteed along your journey while holding the stock, right? There is no stock in the world, right, that indefinitely goes to the upper right in a straight or exponential line continuously. Don't have. Impossible. Don't have one, guys. You have to understand this. So anyone who tells you a false promise that you will never have unrealized losses, significant unrealized losses along the way, because options are like insurance is, you cap your downside. But if you add all the fees you pay for the trades you make, right, and all the losses you make over time, and you accumulate all of those and you look at it from a long-term perspective, you will find that you're actually either not making much money, and so there was opportunity cost because you could have just simply just indexed it long term and do nothing, or it just wasn't giving you the right ROI that you thought you were giving. All this so-called 5K passive income, right? So a lot of these are just selling insurance as false agents. So most subscribers, right, who succumb to this option trading kind of thing, right, passive income, right, usually they'll find that the ongoing subscription cost that they pay, or the thousands of dollars of course fees they paid, not only doesn't work long term and cannot produce an annualized TWR. Remember, always go back to annualized TWR that truly beats an index like the S&P. But they've also found that they've crippled themselves financially because of paying these exorbitant fees in the first place. When the simplest move is just to simply invest in a wide diversified index over a long period of decades and just doing nothing, and focusing on your career, go do your hobbies, right? I think that you will still beat these option systems long term. But most people, right, they cannot accept delayed gratification, or they fail to see the long-term big picture. It takes tremendous discipline and conviction, especially during market downturns or mega hype markets, to remain consistently invested and do absolutely nothing else. The final, most telltale obvious sign of the gurus that you need to watch out for are those that advertise during bull markets. Like, we're talking about ads on YouTube, Facebook, Instagram. Holy shit, man. Thank God I have YouTube Premium, man. I'm so sick of watching these ads, I tell you. I'm so tired, man. I cannot take it already. Lucky I subscribe to YouTube Premium. I cannot imagine those people who are not on YouTube Premium and watching these ads again and again and again about options trading systems and all this. Or now is a great time, generational opportunity and all that nonsense, right? So anyway, what will ContraTurtle be working on next, right? Now that I've closed my Patreon community, because I felt so bothered by the conflicts of interest with subscription services and content creation with subscriptions, right? That when I review my buy or sell price levels, right? I think I would likely be focusing on more longer term projects. Maybe I'll create like really simple investing video guides. But I want to make sure it is affordable and it truly focuses on long termism. And of course, the value that I provide has to be far more than the price people pay. And it has to be an amount that is not in thousands of dollars, lah. Because I think it is not right to cripple regular Singaporeans at the start of their journey who just want to learn more about investing basics. So I think this project will take quite some time, lah. And I'm not in a rush to be honest, because this won't be for quick, easy money. More for long term, my own passion or spreading knowledge. Because I found that a lot of my friends around me, they are quite clueless on investing and very simple things about personal finance. And so this sort of inspired me to think about this longer term project. So yeah, that is one thing I'll probably look into. I'll be back focusing more on YouTube content. I'm coming back. Because I really spent a lot of time on the Turtle Knot community over the last few months. I feel like I sort of neglected my public YouTube channel. So I'll try to be more consistent. I'll definitely be spending more time doing research and studying the current AI cycle. I actually have a lot of thoughts about it. I think maybe I'll have it in a separate episode. I actually think there is a bubble. Lah. Okay, I'm going to get bashed for this. I think there is. And I have multiple things that I'm paying attention to that, has just been consistent over the last few months that makes me think that we're either at the beginning or the midst of a bubble. But I think this is for another episode, okay? That's all, folks. I hope I don't get bashed too much after this episode because these are truly my long-term principles that I stand by. I've always had this goal that I don't know if it's possible. Maybe I can hit 100K subscribers on YouTube. But, I don't want to do it in a way where I'm doing short-term clickbaits or selling out people in my country. But I'll try lah, see how it goes lah. Yeah. Anyway, I hope that you guys enjoyed this episode. May the long-term turtle compounding spirits be with all of you. Thanks for watching, folks.